Well, today was the big day and nothing really happened. I'm just going to look at the charts really quickly, try to keep this one short. Pulling up my day trading chart on AMC. This is a 1 minute chart where I log my trades. You can see I've been following an uptrend for the last 3 days. That's shown by this green dashed line here. And there were a couple of pennants today and it was just really back and forth. A gap down started some buying power right in the morning and pulled the price right back up into the uptrend that we closed below yesterday. And I came to a decision. It's that I can't stop trading. I just can't do it. You know, cannabis, alcohol, not a big problem. Trading, big problem. So I'm just gonna YOLO my account, which is very small at this point. I'm just playing around with gains from previous trades. And I just bought as many $12 puts as I could for this week, for this Friday, and that was 4 of them. My analysis says, hey, $9, $10 is a good target for the end of the week. I know that the options chain is pointing more towards 13, but my pattern analysis would suggest that a drop and a breakout late this week on AMC could actually happen. So I'm going to stick with that. This still looks like a corrective uptrend to meet an overall downtrend. So now I'm going to back out into the 15-minute time frame and show a couple of other drawings here that I did today. I believe I did it on the drawing board. And the significance here is that there is a decline from 34.33, that last high, and the peaks that we have recently seen line up with that prior high. So this tells me that this big move down isn't done yet, that the downtrend accelerated. Now, the speed of the downtrend is measured by the distance from the price to the actual downtrend. And since we've set this low down here, really it's an internal trend line that I'm drawing, I guess, supposedly. Because if I were to draw this trend line strictly from 34.33, I would take it to the low and then not overlap the price anywhere in between those 2 points, the high and this low. And that would come down to here. And as you can see, that downtrend was broken. And that's why I was bullish, because we saw that downtrend break. However, when I started connecting these highs and I projected that trend line back in time, it hit that last high at 34 really, really well. And so that's why I'm thinking that maybe we're actually coming in, testing this downtrend. It'll confirm and we'll push out lower. This is essentially expressing a corrective phase where we have a push down, a broadening pattern for a corrective wave, and then another wave down for legs 1, 2, and 3. And this is now in another corrective phase, which would be a corrective wave 2, and the prior 3 waves are the first wave. Does that make sense? Are you tracking with me? Are you following me? What I'm saying is that this decline from 34 down to 9 was the first half of a push lower. And of course, the price can't make another move lower, but we do see ourselves in an ascending broadening wedge. And I've been thinking that this could be the case for a while, but I haven't charted it. But today, between today and yesterday, we got that fifth touch point we need to actually form this pattern. So from pattern start, 2, 3, 4, 5. And you can see that these are in 3-wave forms generally. And if you subdivide these waves, it might be 5, but that's because it's agreeing with the degree of 1 higher. If you're talking an Elliott wave, which is corrective, actionary, and so it's going to take a 3-wave form, and it did. And now what we see is that this downtrend once again is coming into play and is pushing the price back down. And maybe it's actually not quite steep enough here. It looks like I need to pull it down just a little bit. Nonetheless, you can see that this trend line is acting as resistance. And what this does is it forms a partial rise in this rising, broadening wedge, which is a very bearish omen for the price. If tomorrow morning there is not a breakout above this downtrend, the pain train is coming. And I think that actually might be very likely. I'm going to open up SPY really quick. What's my time? 3 minutes. Here we go. So this looks good. This looks like a bottom might be in, right? Like we've come down, we've touched this trend line, and now we've had a little push higher. And we've got some gaps to fill, so it's possible the price moves higher and up and away, right? This is true. That is very possible. Looking at the daily chart, what I see is a right angled and broadening formation, or it's a descending broadening wedge. It's a broadening pattern, whatever it is. And the failure to push higher out of this double bottom and handle, this would be the handle, bottoms would be here and here. This creates a partial rise in this broadening pattern, which is a bearish thing. And now the price has fallen to the lower extremity of this pattern and has formed, well, it's a green candle, but is it really that bullish? Now, as the RSI does touch down on oversold and pulls up, IV is still dropping, which means this would still just technically be corrective. It's not necessarily a new actionary wave. It's not necessarily going to be bullish. This first leg, this big drop down could be only the first of 3 waves, of which 1 and 3 point downward and wave 2 points higher. So this could be the top of wave 2. It might be a couple of days to put in that intermediate high, but ultimately I think eventually what we're going to see is that we're going to have another push down of a similar height, bringing us down into the 337, 341, mid 350s. That's possible. Now this candle in particular is not very bullish. It is green, but it's not very bullish. It's called a high wave. All right. Bulkowski talks about this candle. He says that it's just a single candle. There's no price trend requirement, and it's just got a tall lower and upper shadow with a very small body, and the body's not a doji. If it's a doji, it's something else. He's got some trading tips here, which I haven't read. Now, it's generally just a candle of indecision. That's all it is indecision. He tested its performance, and its reversal 51% of the time. It's like perfectly random. So we've had a big dive, and now we're testing support in a downtrend, and we're saying that the response to that test is indecision. Does that sound like the beginning of a rally? I don't think so, but tomorrow's open is going to signal whether or not the price continues to move lower or not. I think it's actually very possible that it heads lower. I really do. I think that optimism at this point is premature, and I can see this occurring. Moving over to IWM. It's gonna be the same story, right? Yeah, it's like the exact same story. You have another high wave candle. The average volume here was lower relatively. Implied volatility dropped on the day, and the RSI didn't reach oversold here. So it's very possible that we're just in the middle of a big drop, and the Fed did not cause a rally, and that whatever happens tomorrow and Friday could decide the direction of the market for the next month. So I think overall, I'm still feeling bearish, and that includes AMC. I'm going to go over to GME really quick. What's my time? 7 minutes. See what GME did today. And it looks like GameStop's trying to pull back up. This looks like a bottom, it does, but we're going to have to get above that $129, $130 price level before we really start to confirm a bullish reversal. Overall, I don't think that we saw any bullish reversals confirmed. If anything, we saw the touchdown of support and then a moderately indecisive rise. Moving into tomorrow, I'm either going to get wrecked or keep trading. And actually, if I were to get wrecked, that'd be good, because you know I can't seem to stop trading. I just can't. Hopefully this pattern, this cycle I'm in, will come to an end shortly. So that's what I have for today's video. The Fed spoke, big nothing burger, bullish enthusiasm doesn't look like it. I'm looking for more downside. If you like the content, please subscribe. Happy trading.